All right, welcome everyone to Startup Colorado Lean Coffee. This year we are focused on funding, so each month I have a different expert from the funding world with me. And this month I have Cory Finney here. He is based in Durango and he is with Greater Colorado Venture Fund, which also has a lot of exciting things happening this year. So I will turn things over to Cory. Thanks for being here.
Appreciate everybody taking time this morning. Great to see a lot of familiar faces here on the call. And Vanessa, I love the BOPA shout out. We've been longtime supporters of BOPA. Love Sarah, love the team, love the problem they're tackling in the world. So I also am happy to provide any information if anybody's interested in getting involved with them. Um, so I'll give a little kind of just framing. I'll give a quick background on myself, how I stumbled my way into the world of venture. We'll talk about GCVF and what GCVF is, and specifically within that, we'll highlight our partnership with the Venture Capital Authority. I know that was a topic that we wanted to cover today. And then I'll open it up largely for questions. I always find these to be a lot more fruitful for me personally when it's more of a conversation than just a one-way dialogue. So I'll try and keep it relatively brief and yeah, get going from there. So I'll start at the beginning. Born and raised in Durango, Colorado. I'm a sixth generation Coloradan. My family has deep, deep ties to rural Colorado. All the way back on my dad's side was the first Spanish family to settle down in the La Vida area. Um, Grew up in Durango, and was kind of told, hey, if you really want to go pursue something in the world, you probably need to leave Durango. You need to go to a big city. You need to find opportunity. And that was the track that I was put on, or I put myself on, and that landed me at CU Boulder. Got a degree in finance with an emphasis in entrepreneurship at CU Boulder. While I was finishing up my degree, I happened to be in a class called Business Plan Preparation, and came up with the idea for a ski locker. And that was how I fell into the world of entrepreneurship. I didn't really know what I wanted to be when I grew up, as many of us don't, and thought it'd be really fun to give it a swing at, starting and building this ski locker company that we came up with the concept for. So I was the CEO of that company, raised some funds, built a prototype, and then we ended up signing a deal with Winter Park, got that live, launched at Winter Park. And then we were acquired about 3 years into that journey by another large locker company. So it was a fairly quick ride, but felt like an entire marathon while I was in it. And after that experience, I decided that I wanted to take some time, still stay in the startup world, but not necessarily jump into starting my own venture. So I ended up landing with an accelerator program in Boulder. I was hired to teach finance and fundraising to companies as they came through the program, and that's really where fell in love with the world of startup finance. Um, I, through that experience, got to work with 45 amazing companies in a 3-year period, and one thing that just kept reoccurring was, man, these early, really great entrepreneurs don't have access to that first round of capital. And we saw that kind of as a problem gap as an entrepreneur would in building a business. We saw it as a problem gap in the capital side. So back in 2015, we started the first pre-seed fund in the Rocky Mountain region. It was called Cocopelli Capital. It was $1.5 million fund. Um, we invested 25, $50,000 checks into companies raising anywhere between, call it 50,000 and $1 million, just trying to help these entrepreneurs kind of get up off the ground. And that's where I cut my teeth in the world of venture capital. Through that work, I've always believed that one of the largest untapped resources in Colorado is the resources beyond the Front Range. And so we started doing Angel 101 workshops all over the state, in places like Durango and Steamboat and Aspen, trying to get people to engage locally first, and then hoping that that engagement with their local startup ecosystem would begin to spread into broader regions. So fast forward a little bit, that leads us to the Greater Colorado Venture Fund. In 2018, the state of Colorado put out an RFP, or sorry, it's 2017, and they said, hey, we're looking for somebody to manage a venture fund that'll invest exclusively in rural Colorado. I was living in Denver at the time, and I kind of felt, man, I'll never sleep again if I don't at least throw my name in the hat and see how it plays out. So, well, to keep the story short, ended up partnering with my brother, who was a partner with me on Cocapelli Capital, and then Mark Nogger, who was running the Telluride Venture Accelerator program at the time. We submitted a proposal and ended up winning that RFP process. And so that was how GCVF got stood up. The Venture Capital Authority is so I'll come back to the GCVF story, but I'll segue here to the Venture Capital Authority real quick. So in 2004, some legislation was passed that allowed the state of Colorado to sell tax credits to insurance companies. The pool of funds that came out of that sale was used to create the Venture Capital Authority. So the Venture Capital Authority is managed under OEdit, but it's a third-party body entity with half the board members appointed by the governor, half the board members appointed by the state or by OEdit. And they are tasked with looking at venture funds and finding venture funds that meet their mandates. So their mandate in statute says it has to be early stage, has to be first round of institutional financing, and the capital, 50% of the capital needs to be invested broadly in Colorado, 25% into urban distressed communities and 25% into rural communities. Um, we, the first two funds did great. They had some great returns, and coming out of those funds, it was just kind of right time, right place. Startup Colorado was looking to channel its energy towards rural Colorado. And the Venture Capital Authority thought, well, this is a great opportunity to launch a fund that's going to invest explicitly into rural Colorado to capitalize on the momentum of all the community building efforts that Startup Colorado leads and is a part of. So we've had a very symbiotic relationship with Startup Colorado from the beginning. And uh, yeah, the state, OEdit, they've been amazing partners for us. They seeded the first fund. They're about 73% of the capital in Fund One. They're about 45% of the capital in Fund Two. Um, so happy to answer any questions on the VCA. It looks like Crystal Walsh is online as well. She can correct me wherever I trip up over myself or give false information. But coming back to GCVF, we're now on Fund Two. The first fund was 17.5 million. Fund Two is just shy of 27 million. I think we're at about 46 investments across the two funds. We've had nine acquisitions out of the funds, eight of them in the green, in positive territory, and a handful of write-offs that comes with any venture fund. And we are continuing to deploy out of Fund Two, and at some point in the near future, we'll start thinking about beginning fundraising for Fund Three. Um, let's see, just to touch real quick on venture capital because I think there's a lot of it's funny. So I think venture capital often is thought of as the default means to finance an early stage organization. And somewhat uh, tie that back to Shark Tank. We all have seen Shark Tank, and it's like, oh, you got an idea? Okay, this is the answer. Like, you just need some VC money, and we can be off and running, right? So I think Shark Tank is an amazing tool. I think it has really been a great catalyst for entrepreneurship and business creation all over our country. So I think it's amazing, but I think it has kind of tainted the view of early capital access for entrepreneurs and what's right. So the reality is that when you look at all new businesses, only about 1% of new businesses actually receive venture capital funding. About 19 or 18% of businesses receive some type of bank financing, which leaves, call it 81% of businesses left in what we call the messy middle. And those entrepreneurs are stuck with, taking out second mortgages, credit cards, maybe it's a state loan fund or some other pool of capital that exists for early company creation. But by and large, we serve a very, very narrow slice of the market. So when we invest, we're looking for companies that are headquartered locally, but have the ability to sell their good service product on a national or international basis. Um, and so an easy no for us is like real estate developments, or an easy no for us. Um, Coffee shop, like we think of that as that's just kind of keeping dollars in the community, not necessarily importing new capital into the community from beyond state borders. You can make the tourism argument, but again, that doesn't quite fit. And then generally like service businesses as well. So that kind of falls into the world of what's not a great fit for us. And then um, the companies that are a great fit, we tend to be a little bit more hands-on than a lot of other capital resources. So we sit on boards. Certain companies, I have like Bopa, for example, Sarah and I are in communication several times a week. We're helping them with hiring. We're helping them with all sorts of different challenges, putting together their capital raise, introducing them to investors. For better or worse, we've seen a little bit of what works, but a lot of what doesn't work. So we try and share that knowledge with our entrepreneurs as they're building their companies. Um, One more thing on kind of why venture is not a great fit. Like at the end of the day, frankly, we just are a really expensive source of capital. I think often entrepreneurs look to us and they think, oh, well, it's kind of risk-free money. Like if I lose it, not a big deal. That's the game you're in. You know that there's going to be losses in your portfolio, but when we look at our portfolio, kind of to be in the top decile of what we do performance-wise, we need to have a 3x target on our fund. So if we have a $25 million fund, that means we need to return 75 million to our investors. And when you actually start looking at IRR rates, that ends up being north of 30%. So a lot of the debt resources out there are, I think entrepreneurs often feel they're very expensive, but when you quantify what that means, it's actually often a lot cheaper than the capital we're providing. We also operate on really long time horizons, so we have a 10-year fund that can be extended a couple of years. Um, and that means that we're patient, but with patience comes more risk, and with more risk, we demand more return. So that's kind of the long and short of how we operate, but also why VC is just not a good fit for a lot of companies. So threw a lot at everybody. I will pause there and open up the floor.
Thank you, Corey. I loved hearing your story. Thanks for telling it from the beginning, just like David Copperfield. And really wonderful to hear how it's been built, the whole path of it. I'm sure there are some questions in the room. So, who's got one? Anything that sparked an interest? Yeah, Jeff.
Corey, have you seen any trends that you could comment on in deal flows, either post-pandemic or during pandemic, or just any trends in general that you could speak to?
Absolutely. Man, COVID depends on the angle you're looking at it, but for us, it was a real wind in the sails for rural communities. The amount of intellectual capital that moved into our communities, we went from being this kind of rural, remote fund to all of a sudden everybody was rural and remote. It's been good. It's allowed our entrepreneurs to frankly have access to more capital. Investors will take meetings with people who aren't in their backyard, or, they can't meet at the coffee shop. That became normalized. So I think it's been a huge net positive for entrepreneurial creation in our ecosystem. In terms of what we see, like if you look at our portfolio, it's really a general smattering of industry across Colorado. So we have aerospace, we have ag tech, we have B2B SaaS, telecommunications, healthcare, all the general industries that are kind of well established in the state is those companies are being built all over the state, not just in the Front Range corridor. Um, I think the one SKU that we have that the Front Range doesn't have as much is we have a lot more product and outdoor companies, right? We that's just by nature of the kinds of entrepreneurs and folks that choose to call the mountains home. And so we have more outdoor, but that's always been a huge industry across Colorado. And then post-COVID, really in the last, I would call it 18 months, like the major trend has been AI, right? I think everybody knows, feels, understands
What?
that.
What are you
Yeah,
talking about?
crazy, right? Yeah, if you don't know what AI is, pull open ChatGPT and ask it. But so we've seen a lot of entrepreneurs who are multi-time founders who are wanting to now build in this new technology stack. And that's been really interesting. So a lot of the deal flow for us has been, I sold one or two companies. I kind of thought I might be done, and I moved to um, Frisco, or I moved to Canyon City, and now I can't help but jump back in the arena and go play in this new ecosystem, right? So that's been definitely a pretty strong trend.
Awesome. Awesome. And Deborah, what do you have? Thanks
Cory, I
for
was
waiting.
just curious.
You did perfectly raising your virtual hand.
Cory, I was curious as to how you all source your deals, and do you go out and find them, or do people come to you? Do you do events where people pitch? Tell us a little bit about that. Thanks.
Yeah, that's a great question. So the first year and a half of the fund, this was pre-COVID. I think I personally spent 155 nights on the road, something like that. I was living in Denver at the time, and so I spent part-time in Denver, but most of the time was out across traveling Colorado and connecting with folks. Through that work, we kind of laid an early groundwork for what we call our community champions. We all know the folks who have the finger on the pulse of entrepreneurial activity in our communities. A lot of those folks are amazing sources of deal flow for us. So that's been a huge thing. Um, let's see, another bucket would be kind of just like the co-investor or service provider bucket. Other people who are out in the entrepreneurial ecosystem who see something like, oh, if it's in, the Edwards, we think of GCVF. They'll send it our way. Our founders have been a really incredible source of deal flow for us. They often know other people who are building in their communities, so we've gotten a lot of deal flow from that. And then we do events, so we're pretty active. We're on the road quite often. Frankly, Startup Colorado has picked up the baton on a lot of the event stuff, and Vanessa specifically has been been leading a ton of that charge. And so we'll piggyback. We'll show up at events. We launched a pitch series, man, many moons ago now. Startup Colorado has taken over that pitch series and really evolved it. So there's multiple pitch events a year now. We're always looking to support those, and then we always look to kind of double down on anything local. So if Scape does a demo day, we want to be at the Scape demo day. If there's a demo day in Steamboat, we're happy to show up and be there and support in whatever fashion we can. So um, those have been kind of the broad buckets of how we get deals. A lot of it is from folks like yourself, just awareness of us. And when you see something that fits the mold, our default is send it to us. Don't feel like you need to screen on our behalf. We're always happy to take a call. Our job is to talk to entrepreneurs in rural Colorado. It doesn't matter if they're a fit or not. We always want to be helpful. We want to, support business creation all across our state. So default on sending them our way.